Good morning, everybody. Welcome to the Flow Show. Fed Day, Wednesday, the 7th of May. And we're going to find out how straight a line Powell can walk later on. Pretty low expectations for this one. Okay, you're ready and set and raring to go?
Good morning, Ryan. Good morning, everybody. Ready? Yes, but same as you. Just expecting Powell to walk all the lines without crossing any red lines and wait and watch.
Yep. Hopefully it'll be a quick one tonight and get back to the football. I might be watching the football instead of watching Powell anyway on my desk, but we'll see what happens anyway. Right, let's get stuck straight into it. China at last cut all their rates. If they had a rate, they pretty much cut it overnight. They cut or will be cutting the RRR by 50 basis points. Will cut their main policy rate by 10 basis points. That will lead to a 10 basis point cut in the LPR. They cut their 1 month, 7-day SLF rates. Basically they slashed rates all over the shop. Giving more liquidity to the property market, easing conditions there. So a big round of easing from China, as expected, has been expected since the latter part of last year. So they finally went and done it. Hence why there's not been that much reaction in the currency, at least. And now we move on to what that effect happens. What they also did was added to their gold reserves for the 6th straight month. FX reserves also ticked up too. So they're still on the gold buying front for that. Kay, anything of note from those China rate cuts? Not much of a move in Aussie dollar, as we know as well, all well telegraphed.
Yeah, it's been coming, right? They've been talking themselves about it for quite a long time. Better perhaps do it now than when the trade talks will be ongoing. That's likely the thought behind it. It's expected. I think for the move in the currency, it's probably better to wait perhaps until we have a little more clarity on how harsh those talks will be or how friendly they will be. And on the gold reserves, I was actually a bit surprised that after all those rumors where they went out of U.S. assets and all those kind of things, that the gold reserves only stood at just a little over 6% at the PBOC. Obviously, there's a lot of I guess parked or held at their submarines somewhere, but it's still officially a relatively low reserve for a metal where people and we've seen them buy virtually every month for the past 2 years, barring a few months of pause. So something to continue to watch for all the gold bugs, whether they will hold now a little bit while those talks are ongoing, or continue just to buy.
Yeah, absolutely. And it's keeps the price buoyed up anyway. So we can talk about that a bit later. As for the rest, we've got a bit of data out as well around the grounds, particularly this morning, if I can find it. Where are we? No, too far. There we go. A few little bits and pieces, PMIs and whatnot coming out around the ground. Japan services, that number came in 52.4, a touch above expected 52.2. Need to get another little boost for Japan. Numbers going in the right direction. We had some Swedish CPI data. Little bit on the sticky side, one could say, depending on which metric you're looking at. It's all showing red, but don't be fooled by that, because the year-on-year measures, as you can see there, didn't or fell more than expected, but still came in unchanged on the prior month. Some of the other measurements as well, the CPIF X energy actually went higher year on year, came in at 3.1% versus minus 0.2% previously. Was estimated to come in at 1.2%, so much higher there. Kay, I don't know when the next Riksbank is.
Tomorrow.
Oh, it's tomorrow as well, is it?
Yep. Tomorrow, Riksbank and Norges Bank, if I saw that correctly.
Oh, yeah. So
both of them tomorrow morning. They are already at 2.25%. Not sure whether we should be expecting anything more. Norges Bank may also be a bit on hold, watching to wait, but they are at 4.5% still. Norges Bank, I think, perhaps they're a bigger chance for them to perhaps do something tomorrow. Norwegian kroner has been pretty steady of late. Between those two could be slight Caesar effect perhaps on tomorrow's rates, but I'm just going to watch the decision tomorrow and see what the Riksbank said. The Riksbank officials have been relatively dovish for quite a while, and perhaps it's now the time to sit back and wait a bit there. And for the Norges Bank, it's a limit border decision. I think they may actually try and do something tomorrow just to prevent those interest rates from being too high when anything worse would happen. Because I mean we're seeing those oils having come off over the past months, and perhaps they want to keep things on the better side of the economy with a little help from our friends at the Norges Bank. But it's all like nothing is a done thing for the Scandinavian central banks tomorrow.
Yeah, absolutely. I think for those banks that still got rates 4% or above, there's still a lot of scope for them to bring stuff down. And again, as we've been saying, if you take all the Trump uncertainty out of it, you got to ask the question: what would they be doing with those rates if they didn't have that uncertainty? And pretty much all of them would be cutting. So just keep that in the back of your mind. If we get over these trade humps, tariff humps going on, the central bank's probably going to get back to their script in wanting to get rates down. So, as I said, there two different central banks, one with 2.25 and one with 4.5. Let's see if that changes tomorrow. The EU. Oh no, let's stick with the data while I'm here. While we're talking about that, while we're in Europe. German factory orders came in at a healthy 3.6%, way above the 1.4% expected. That's going to be some consolation for new Chancellor Merz, who finally got put in place after a rushed second vote yesterday afternoon, after he lost the first one. And after he won that vote, he vowed to raise potential growth to 2%. A whopping 2%. Okay, I got to ask you, how do you raise potential growth and not growth? I mean, UK could have potential growth of 20%. Ain't going to fucking happen, though.
Stick a number on it, Ryan. Stick a number on it. Keep your population happy. I don't know where they get it from either. They first have to see how much will get along with the rest of the Europeans as well, and I think nothing is. I mean, it's just a number on a piece of paper, you know.
Yeah, and that paper is now today's chip paper, as we've got to say over here. So anyway, that's what he's going to do. He's going to raise potential growth to 2%. You go ahead, chum. Right, looking at a bit more of the data, we did get some construction PMI data coming out. Again, some little improvements around the grounds, but nothing to write home about, apart from Italy. The rest are still in contraction. Italy retail sales coming in soggy there, so that's looking like a load of crap as well. Eurozone retail sales, again, we get all these ECB bods and whoever saying that there's signs of growth and resilience in the economy. Well, there you go. There's your growth, minus 0.1% retail sales. So again, I don't know what crystal ball they're looking in, but it ain't working. Yesterday's data out of Yankland, we had the trade balance for March, pretty much following what we saw in in the prior goods trade balance, a wider deficit coming in there, imports outstripping exports. So we've seen that all before. We know the reason why. Canada IVPMI came out as well, and depending on which one you want to believe, but both of them came in worse off. The non-adjusted one going into contraction, so not looking good over there. We got the old Atlanta Fed tea leaf reading GDP number as well. Now see 2.2% coming for Q2, up from 1.1% prior. Again, might as well stick a wet finger in the air. US Treasury Secretary Bessent says that strategic uncertainty is part of negotiations over tariffs. Every central bank, pretty much every central bank, is pretty much on hold because of all the uncertainty going on. Banks like the Bank of Canada can't even produce forecasts anymore because they don't know how to factor in that uncertainty. But Bessent says that uncertainty is part of the negotiations. Everyone loves him for that. They did say perhaps as early as this week we'll be announcing some trade deals with some of our largest partners. The EU is getting ready in case trade talks do fail. They're going to potentially hit the US on $100 billion worth of goods if those tariff talks fail. We do have the FOMC today, but just a little bit of procedural note for you. Fed's Schmid is going to be missing the meeting due to the unfortunate death of his wife, and so Kansas City Fed's Vice President Kim Robbins will be in place of Schmid, and Kashkari is going to vote in his place. So whether that affects anything or not, I don't know. Cash and carries never. I don't know how it works, Kay. Would he just vote the way Schmid wants to vote, or does he put his own vote in, or does it even matter?
Or likely his own vote, but yeah, they must have talked to each other. I don't know if it changes anything, Ryan, for today at least.
No, definitely not. Right, Trump and Carney had their meeting finally, where Trump came out saying we will possibly start to renegotiate the USMCA, and then said we don't know if it's necessary to renegotiate the USMCA. Carney said some of the things about the USMCA will have to change, so we'll have to negotiate. So round around the houses they went over that one. The rest was all platitudes, and Carney asked him not to call Canada the 51st state, and they're all going to work together and everything's tickety-boo. Then Trump has come out with there's going to be a big, earth-shattering announcement over the next few days that's not necessarily on trade. I don't know if anyone's had a sniff of what that is since, Kay. Do we know what that's all about? Is this a Ukraine thing? Is this the minerals deal?
Yeah, I mean, anyone's guess, right? Is it Middle East? Is it with the Saudis? Is it a war thing? Is it? Well, it's anyone's guess. I mean, usually his earth-shattering announcements end up being a storm in a glass of water, unless there is a deal in Ukraine. But I guess at this stage that this would be on the geopolitical front the biggest one that could happen. But no one agrees on the territorial side of things over there. So I'm not, and they continue to send Scuds and drones over the border every day. So and I don't know what he could announce over there.
Yeah, but anyway, he's prompted it. So keep an eye on the old truth bonds that may drop over the next, any time now could be. We'll see what massive announcement that's going to be. And yes, Stephen, you know it. You've got to be born cynical if you come from this country. Anyway, moving on. UK is apparently getting closer to its trade deal with the US, according to the FT. there's going to be some packs on lower tariff quotas for cars and steel. So it's something else that might keep the pound positive. I think you're going to have to watch all these trade deals. If they get announced in a flood, like 20 headlines, deal with you, EU, deal with UK, deal with whatever, then it's probably going to be a more broad dollar move. But if they drop individually, then you're probably going to see each country's currency being affected first. So if we get a deal announced today with the UK, you'll see the pound rally. 2 hours later, we get a deal with Japan, you'll probably see the yen rally. So just got to watch how these deals, I think, get announced. It just might change the complexion of how currencies trade around that. But that's just my 10 pence worth. I don't know what
Risk,
exactly. It's what, sorry?
In that trade risk, if those are positive deals, global risk will probably do a bit better. I was a bit surprised because we had the run in sterling before the announcement with India, and then since the announcement, sterling actually lost most of its steam. If you look at euro sterling, for instance, we are just back to the level we were before the potential announcement, and not sure if the UK is very happy and they strike a deal, and hours later India strikes Pakistan, and the geopolitics are still very, very fluid from where I sit anyway. By the way, I mean, thinking about what Trump announced, could be that that deal with the sandbox, right? The sandal deal, the sand deal, or something like that, with Saudi Arabia, right? He's probably going to buy a lot of sand, which contains minerals, and if he can't use the minerals, he can fill up the holes or the sand boxes in on his golf courses.
I think we should call it the golf deal. The golf deal from the Gulf.
The sand deal, the sandal.
Whatever he's buying, who knows? Like I said, they're nice to the Eskimos. Anyway, Treasury Secretary Besant was out and about again. We finally have got something going on with China. Apparently, him and Trade Representative Greer is going to meet with China's lead representatives on economic matters later this week in Switzerland. That's according to sources, but that was then confirmed by China's MOFA, saying that Vice Premier He Lifeng will meet Treasury Secretary Besant. Then Besant confirmed after that, saying that current trade tariffs with China are unsustainable. We will meet on Saturday and Sunday with the Chinese. He says China has been the missing piece in negotiations. So it looks like we may have some weekend risk to deal with, headline risk to deal with. I think we shouldn't expect anything big from this, but then the market might take that as disappointing. What I think the most we'll get is that this is a first round. They're a meeting where they will set out how they want to take negotiations going forward. We're not going to get trade deals or anything coming from this. So yeah, if the market's looking for something hugely positive going into the weekend, it's probably going to be a bit disappointed. But if they come away from that meeting that they're going to talk over the next few weeks, then we've got the potential for the snowball to start rolling, shall we say. But just bear that in mind for the weekend. We may get that headline risk. And that's that for yesterday and today thus far. Anything else to add, Kate?
No, I think we covered most of it. Yeah, I agree on those meetings. It's such an important piece of the puzzle in global trade that it's not going to be decided upon in 1 week in time. What could happen on Monday is that we have a reduction in reciprocal or whatever other, how they may call it, tariffs from the US, sending a positive message to China. Everybody goes home happy, and they decide upon the lunch menu for the next meeting.
Yeah, pretty much. That's how I expect it to go. Right, let's get stuck into the Fed for what it's worth. Obviously, no expectation of any rate moves whatsoever. The Fed are in a holding pattern. They just as got as much uncertainty going on over there as everyone else. The economy hasn't been doing too badly, despite everyone waiting for it to fall off a cliff. So I think really, I mean, we haven't even got any operational changes to talk about because they did that at the March meeting where they cut their QT by 20 billion per month. And just to make it clear, because there have been a lot of fin twitters talking about this, the Fed buying 20 billion of this, that, and the other. Yes, they're doing that because they've stopped QT, which means instead of bonds rolling off and then just letting it go to the value of 25 billion, they're now reinvesting 20 billion back in each month and cutting 5 billion on the other side for their QT. So they will be entering markets and buying 20 billion of bonds a month, but match it with the QT and it's sort of net zero. So they're not adding and they're not taking any more away from their balance sheet. That's how it's going. But no change expected on that either. And really, yeah, it's Powell going to be talking about uncertainty, saying that the economy isn't rolling, and it should be a pretty boring 1K, but we can but
In
hope.
theory, yeah, in theory, I'm.
Where could the shocks come from?
Sorry.
Where could a shock come from? Or not a shock, but
Well,
something we
that's
haven't thought
what
of.
I said in the room as well. Perhaps on that bond thing, because Besant also spoke about it, and the Treasury report on the quarterly refunding uh, um, was also mentioning something about the flexibility on the bond side. So there may be something that he could give markets, but the rest, I mean, giving a hint at the next meeting would be a total surprise. I think they are in wait and watch. But again, this bond thing may be it may be of some interest because there's a lot maturing this year. So he may actually say that they are going to have a kind of flexible approach on the reinvesting side of things, meaning that if needed, since there is so much maturing this year, that they even do a bit more. Yeah, that's the one that I posted this morning in the room. So there is this kind of uncertainty, but for the rest, yeah, it's probably going to be. We're independent. We wait and watch. Enough uncertainty surrounding trade and tariffs not to move now. The market is expecting the first rate cut for. Well, I mean, some are pushing back against it. Others keep June on the table. That'll be the other one to watch. Is he keeping June on the table clearly or not? And that's the only thing to expect. Take away all those immediate tariff negotiations and stuff. There is nothing, as you say, in today's data to proceed to a cut or to even hint at one.
Yeah, and the weird thing is that we have had cut expectations ramping up. You know, we're now pricing 100 basis points of cuts by the end of the year, but you haven't seen that being reflected in the dollar. You know, we've seen the dollar gaining over the last week or so, even while those rate cut expectations rose. So I think the place you've got to look in is bonds, because if we do get a bit of a reprice there, it might not be a reprice in the dollar, but it's going to be yields that will probably reflect those 100 basis point cuts if everything's tickety boo. And we're still expecting, what are we on? We're still expecting 2 cuts, or the Fed's still expecting 2 cuts, aren't they? By the old
This
docs?
year?
Yeah.
For this year?
Yeah.
Oh no, we're closer to 4.
Oh, well, the Fed are closer to 4. I thought it was at 2. I'll have to have a look.
The Fed is probably well, okay. I mean, maybe 3 or so, but no, I thought you said about the market. So yeah, as Mark says, it's 3 around the Fed. That's what I thought. But the market they went up to 5 at one stage, but now closer to 4. And but yeah, the do we have no, it's next month, yeah, the
Yeah,
big
June's the forecast meeting. Yeah,
the
yeah,
forecast is next month, huh?
yeah, yeah.
Yeah,
So,
all
oh
right.
well.
Okay,
There you
so
go. That's how
nothing on
interested
that
I am.
front.
Yeah,
Yeah,
that's how
not
interested I am in the Fed right now. I don't even know if they're 2 or 3 cuts, but yeah, thanks, Mark. They're at 3 cuts. So the market is 1 cut over where the Fed are expecting it to. So that's where we might get a bit of adjustment. Anyway, that's where we're at. So while we're in bonds, you pretty much want to look at this. We've had these pingings out of the range, but your sort of marker is going to be 450, 420. And we give or take, we're pretty much bang in the middle of that range at the moment. Keep an eye, obviously, on the shorter end, because that's where you're going to probably see the bigger moves, depending on whether we're pricing 3 or 4 cuts still by the end of it. Dollar wise, dollar yen. We've had the move up, we've had the move back down. We couldn't quite get down to the 142 yesterday, so a bit of a step up off that support bounce thus far is pretty weak, though, in dollar yen terms anyway. We're still holding below this 144 level, which is a bit of an intermediate level. Well, there's not much going on. For me, I'm going to be worried 142 or 145 and see where we are post Fed, whether we're above or holding, below or holding, or still stuck between the two markers. Euro dollar, I'm not expecting much for this one either. But maybe we get something market wasn't aware of, and maybe we get a move to the outer edges of the range. I think that's more wishful thinking than anything else. Any pairs you're sizing up for this one in particular, Kay, or assets you're sizing up for this one?
Well, looking at the meeting, the Fed meeting as such, I'm not going to expect too much. What I could see is that because the Fed is likely being on hold, because we still have enough maybe differential also, we could see pre-Fed a little bit of dollar recovery. We're actually in the process of, if you look at cable, you look at the Aussie, the Kiwi, they are correcting a bit. I think we're just in pre-Fed position adjustments, and then we will see afterwards. My base idea still unchanged. I still think that if we see a bit of an algo recovery of the dollar over the Fed without obviously announcing too much, if there is an announcement, like let's say, for instance, on the bonds, that they say like, yes, we are going to up the bond buying because there is so much maturing this year, and I mean, just assuming that he may say something like that, you will probably see the dollar weaken straight away. But I'm still in that mindset that dollar recoveries may find sellers for now. And yeah, I mean, there's a couple of pairs that I'm going to be watching relatively closely. Um, I will probably have a residue of position in the Kiwi because I had that call, but it's maturing today, so I don't know. It's probably going to go bang onto my strike at 59.70 for expiries. But that one is still looking quite okay for now. This Kiwi dollar. Aussie Kiwi having stopped. Well, I mean it's moving around, but it's basically hanging around that 108. Aussie will probably be running in tandem with the Kiwi, and I quite like to keep a close eye on those commodity currencies because they should in theory be doing quite all right when we have a thaw in or we have a reduction in tariffs or so. Those are two that I'm going to watch, and then. Yeah, there's also talks about a deal with Switzerland. shy bounce of the Euro Swiss. That's another one that I keep an eye on just for risk. Yeah, if we hold those low 93s, high 92s, could be interesting to keep a little bit of it. But we have already seen that you get a 50-60 points rebound, and you already find sellers like we have seen yesterday, trading around what was it, 93 and a quarter, went up to 93, 85, 90 this morning, and it's already, the party seems already over. So we really will need a positive risk there to see it move higher. And despite what Schlegel was saying, I bought some Euro Swiss yesterday on Schlegel, but it's still very anemic bounces there. So that's those are those interesting ones that I'm watching, and that's not specifically over the Fed, but there's a couple of other interesting ones now, especially after Carney's meeting with Trump and those chats surrounding USMCA. If that's left, barring some details, pretty much unchanged, it could be beneficial for stuff like Canada and Mexico. Then I'm thinking, especially down the line.
Yeah, absolutely. Well, just going to jump back to Aussie dollar quickly because I think this feels like one of those moments where we're just waiting to get over the hump. And if we get over the Fed hump and there's nothing new and nothing we need to worry about, I think there's a chance this continues to go higher. I'm still long. We're not far off my level down here, 28 pips away. So we could even knock that out if the market is clearing the decks a bit later on. So I'm going to think about what I do with my longs up there, whether just to stretch my stop below, just try and wear a bit more, or just get out and see what happens and take it from there. But I think there's a possibility, no shocks later. We may continue up in currencies, commodity currencies like this, like the Kiwi, like CAD as well. I'm looking also at dollar mex because I'm still short that one, and it's not going down anymore. We've had a few headlines, Shine Bomb saying that there's deals to be done, other negotiations going on, but the market's not seeing the MEX gain anymore. So that's a little, signal to say, maybe we've done going down. Maybe the market's pricing all the good news. I think what we need to see for this, for the loonie, is what happens once we get a confirmation of a deal. If, depending on where we are, if we get that confirmation and we can't break new lows, saying this one through the 1950, 51.50 level, that will be a signal for me to maybe that we've gone as far as we have in this move and cover some more of my shorts in this one. Because if we can't go down on confirmation of big news, then that'll be a price action signal I'm going to be paying attention to. And pretty much the same for the loonie. We're tapping the 138 again at the moment. It's all been a bit wishy-washy around this 138 level. Can't decide whether we're going to stay below or above for any length of time. Again, get a confirmation of a deal might mean we get a last hurrah move lower, and then obviously the market's going to move on to other things. So if I see 136.50, I'll be very, very tempted, I think, to maybe start picking up a few longs down there, 136.50 down to the figure, down to that zone there as well. But we shall see. We shall see. Other than that, I've not got much else on. And I'm happy to run that way for the minute, get over the Fed hump and see what opportunities pop up, I think. Be a bit of a sniper. Right, Kate, I'm going to smack it over to you, mate. I don't know if you want to look at Aussie CAD.
Thank you very much. Thanks, Joao. That's one that I actually never look at. To me, they're either completely different or running very much in parallel, which on the back of risk or something like that, you know. But okay, let's look at what happened here. You know, yesterday or the day before, I was telling like on gold, this could be, if we get through this level, we could have a little look at what's happening up at 34, 35, 40-ish, and that's exactly where we went. Then we had that announcement on US-China meetings, and obviously, those who follow the flow here, they know exactly what then happened, because I said like the gold is still a hedge versus uncertainty, bad things happening and stuff. But if things get more positive, you see this kind of reaction. And in gold, now we are trading around this box here again, and I'd say mm, it hasn't really run in parallel with yields. Yes, it will have an immediate probably move when if the Fed makes yields move, which I kind of doubt today. But really here we're trading whatever Asia is doing and where trade will be at, and trade also um, giving us a hint about whether the global economy could be doing better or not. So if things really materially improve, we will see that after the weekend. But until then, I could actually see a bit more correction. Perhaps get a test of this 33 and a half. Why not even lower? We have seen those big moves lower. I guess those who are looking pure at the trade situation are now clinging on to positive US-China news and are likely will want to see this trade a lot lower. I don't know where we're going to be, but if you front run the events a little bit, this could and it's worth really noting that down. This could really open with a big gap on Monday, and I would say especially if the Chinese, instead of being happy around the negotiation table, break the table and go like, well, no, you sort it out. We're okay with where we are now, then we will probably see a big gap higher. If in turn everybody's happy around the table, you will probably see the same similar gap lower, and then we may be talking about getting back down to levels here. But that's front running the events. I'm a little surprised that silver is really running in tandem, because usually when the situation is going better, silver should in theory outperform gold to a certain extent, but even so, I mean, silver lost as much, if not even more, than gold overnight. But we stopped there, and that is the 78.6 of some drops here, and also this trend line. I said 33 and a quarter, 33.30. Keep an eye on it. That's exactly where we stopped, and we are coming back down. So we are. Some call it a flag. Some call it just something else, But we are still banging our head against the trend lines, and we could just come back into the middle of the road here before we get into the later events. Um, and okay, let me quickly go over to where have I got this one? Where have I got this one? I think I've got it somewhere. I think I've got it somewhere. Do I have it? No, if I don't, I'm going to put it up, Frederick, for you. The dollar stocky. Oh, here it is. The dollar stocky. Okay, I haven't really looked at it too much right now. I'm rather have my eye on Noki stocky, to be honest with you. Dollar stocky. We are 952 down to, well, that's a bit wide, because it's a daily chart. Where are we? 960. We're just hanging above 950 here. Okay, if you look at really short term, for the Riksbank. I think your supports are around here, around the 952, those lower ones that we saw earlier in April, and then 942. This is a pretty decent support zone here, okay? If they would cut in turn, and we are just hanging around this 960, we may see a bit of a revival up to 980, and there we should make a bit of a decision, because it's not too far from the prior high here that we haven't had on the 1st of May. So watch what's going on if we get back to 980. Those are the nearest levels that I would say. But as we can see, it's pretty much in a downtrend. Okay, so we are going to have to break those 980 prior low 990 to really get going up to 10 again. So for as long as we are not, we're going to have retest here or retest here, and we start to fail, we can still come back down. This is how the picture looks to me. My sentiment towards Stocky may be at this point, perhaps that I rather sell dollar Norway than dollar Stocky, perhaps, but it's on the tip of my toes. It's just because I'm actually not having anything in either one of them. But if you start to break below 940, though, this looks that there is going to be a lot of room there to get back down to perhaps 900s, you know. And if you look at that, really, the bigger support levels here that we had in down to January, they all have broken, right? So you really are going to need to move back above those to start going to the top side again. For as long as that does not happen, you can see a bounce and then do something like this, perhaps. Okay, I hope that helps you a little, Frederick. Okay, Pussycat, and I'm going to see what I mean, Joao. It's empty. I really don't look at it right now. Okay, let me put a few lines on there. We are not far from a bit of support, perhaps, if you stick just a few lines in there. 84.80. Where are we right now? Oh no, we are trading much higher. We are trading up there. It's going to depend on the deals, probably that Canada is potentially going to make. But if you look at this is a sharp reversal higher, and this is where also Ryan and myself was saying, like, maybe a bit more positive towards those commodity currencies, especially the antipodians. And I'm still in this kind of mindset as well. I'm not a huge fan of the Canadian right now, and I'm going to show the dollar cat because I still have that longer term picture running. If you start to go above 90, 90, 20, 90, 35, Joao, then it's probably going to do another leg higher. Here we seem to be turning around a bit of a neutral zone, get back below 88, and that's probably going to look quite bearish for it. But since we're on it, I'm going to look, because I do keep an eye on that dollar cat, and we are really getting to the point of the triangle, whether it's the inner one or the wider one. But I just want to reiterate the stuff that I'm looking at in this dollar cat is this whole support zone, what I was saying for the more medium term then, right? And it goes all the way down to 137, low 137s, okay? For as long as this does not break lower, I still think there is a chance that we hit a bottom here and start to go back up. Okay, so I'm still keeping an eye on it. I don't have a position right now. I just see that we are trying. If it breaks one day, then we are probably going to add another 3 big figures to the downside. But it is trying, and it's trying very hard, but I'm not sure that we are really ready to already break it. And then you bring it back to your crosses, Joao, and I think you keep an eye on the dollar CAD for hints at what may happen to all your crosses, because if this is really building a bottom here, I kind of dare to bet that the Canadian dollar on the cross side is also going to perhaps suffer a little bit. And a hint here for a bottoming formation would be if we break back above 139.40.50. Okay, right. I'm don't have too much to talk about. We're in a bit of a wedge here on the euro sterling. That one, as I said, it was sterling was very bid until the confirmation came out, and then we bounced again. We bounced again of a bottom line of this wedge in euro sterling. So that's one to watch out for. We are in a bit of a resistance here, the wedge trend line, but it's, to me at least, a relatively short-term one, so it's not really a big one, but we can see those prior levels where we have been 85, 50, 10, 20, sorry, stretch it up to 85 and a quarter. Bit of a resistance area here on the euro sterling. If we break back above 25.30, we probably are going to move a little bit higher. If we start to confirm those tops again, more yo-yo activity, I reckon, and with the potential to go and have a look at 84.5. There's a lot of trend lines coming together and horizontal levels at 84.5 in euro sterling. So this is a level that I'm really going to pay close attention to. Last one, Kiwi, still positive, but again, yesterday there was an occasion, or there was a possibility to go and retest the 60, 30, 40, and we fell short, okay? So this, I think, is also showing us that we're not yet ready to break up. Could be post FOMC, I don't know, but we're not yet ready to really break higher. If it would break above 60, 40, then I think we're in for another at least 2% higher in the Kiwi dollar. Bottom side 59.60, first level of interest, 59, 20, 30 below. That would bring us back into this flag here. But of course, the main level will still be 58.90 figure. For as long as that holds, you can take all these lines off. For as long as that holds, I still think we are in relatively positive territory for the Kiwi dollar. And with that, guys, I'm going to give it back over to you, Ryan.
Thank you very much, sir. Good stuff as always. Just grab the screen back quickly. Before we finish up, just want to once again make you aware of our offer, 40% discount that we're offering to sign up to our chat room and platform. Lots of people taking advantage of that. We've seen a lot of good interaction coming into the chat room recently, and our trades room is absolutely going into overdrive, Kay, which is good to see. Lots of people putting their trades out and the reasons for their trades. It's not a
absolutely, absolutely, and more people are joining us, so it makes it all the more interesting for anyone to come and join us as well, and to join in the conversation, help each other out with ideas, chat about fundamentals, takes, whatever you want to chat about.
Yeah, there's plenty of fun and games going on in those chat rooms, believe me. So, yeah, it's not going to last forever, this offer. So take advantage of it while you can. Come in, give it a go, and hopefully it improves your trading. And on that note, we'll call it a day. Stay safe over the Fed. We'll go over what's happened on tomorrow's Flow Show. Obviously, have a great day, everybody.